So thanks everyone. My name is Varun Malik. I'm the CEO of Consolidon. Consolidon is a new age consulting firm, and we work with innovative businesses to help them grow, or we help with more traditional businesses to help them become more innovative and then grow that innovative part of their business. We're really looking forward to today's webinar. Great topic to discuss today, very topical, affects all of us in the UAE, whether we're a small business, larger business, or a multinational doing business here, whether you're in a free zone or mainland. We are all interested to know what's going to happen with this change in taxation. I have two of my colleagues from Compliance 360 joining me today to share their expertise. I have Arafat, and they will introduce themselves as well, but I have Arafat, who was my colleague at PwC many years back. And I'm really looking forward to learning from him today. And we have Imad, who's a tax expert himself, and of course will introduce himself in a little bit more detail, but really looking forward to learning from both of you. That's it from me. Just some quick house rules. Keep yourself on mute, please, during this meeting. The reason we've made you all participants in the meeting is so that we keep it interactive. So feel free to ask your questions. So during the presentation, we will take questions as well. And if you're comfortable keeping your video on, that will really help the speakers a lot because they can see some of your reactions if you're comfortable with that. And with that, I leave it to Arafat and Imad. Looking forward, guys.
Thanks very much. Thanks very much, Varun. Let me introduce myself. My name is Arafat Umer Naviwala. I'm the managing partner of Compliance 360 consultant. We are a group of companies based here in UAE, and we are into audit, VAT consultancy, audit, external audit, internal audit, risk management, and tax consultancy as well. By profession, I'm a chartered accountant from ICAW, and I'm also the ACC as well. Well, my experience is from the ENY, Ernst & Young. I work for PricewaterhouseCoopers as well. And I also served as a head of audit in Union Properties, one of the local companies here in Dubai. And I also served certain different positions in different organizations. So yeah, that's about myself. Now I will pass on to Imad to introduce himself.
Thank you very much, Varun, for your introduction. Basically, I am from Pakistan. I am not a fully qualified, but I am a partly qualified chartered accountant, and not a chartered accountant. I am a partly qualified accountant, and I am a tax consultant, already a member of Lahore Tax Bar Association. And I have a license of a practicing tax advisor also over there. I started work from Pakistan, and I worked over there in a national and a multinational companies. And then I moved to Dubai in 2007. And I worked here around 14 years as a head of finance, as a finance manager in district cooling and the utility sector. And I have a lot of experience over here in the implementation of the VAT. I also introduced the VAT in my company and implemented. Then I did a lot of VAT impact assessments. And then after that, I joined Compliance last year and worked with Arafat in ESR, UBO, and VAT impact assessments. And that's it.
Thanks very much, Imad. Yeah, so Varun, shall we move to the presentation?
Absolutely, by all means. And if you want to do the agenda slide, if you're covering that.
Yeah. So let me quickly run through the agenda, and then I will pass on to Imad to go into the detail of each and every slide. So first of all, introduction of the speaker is done. Then we will touch upon the UAE federal tax law. We will tell like how it was introduced and when it is going to be applicable. What is corporate tax? Reasons for introducing the corporate tax in the UAE. What is the effective date and rate of the corporate tax? Then what are the corporate tax system which is going to be used in the UAE, which we will also touch base on that as well. Then we will also discuss about the exemption as well. What are the exempted items which will, which will be attracted in the UAE corporate tax. Then we will also discuss about taxation on individuals, taxation on non-residents, then treatment of free zones, tax groups, banking sector specifically, and then what is the impact, what is the rate of the large multinational groups, what is transfer pricing rules, how they are going to be implemented, then economic substance regulation. Then we will also discuss about what is the way forward, what is the plan, what our audience or our attendees they need to focus on if they want to do the streamline of their processes with the corporate taxation. We will also touch base on that as well. And lastly, we will also, we will also tell you like how we can help you with those requirements. So now I'm passing on to Imad, just to start with the detailed slides.
Thanks, Arafat. Thank you very much, all the audience, for taking part in this webinar and giving their precious time to understand what are the impacts and of the corporate tax. UAE federal corporate tax. After introduction of the VAT in 2018, another toward the stability of the economy is the introduction of the corporate tax, which the UAE government is taking up. Ministry of Finance has announced the introduction of the corporate tax on 31st January of this year, 2022, which will be applicable on all the businesses who will operate within the jurisdiction of the UAE. All these businesses will be impacted and they have to comply with all the rules and regulations. These rules and regulations will be time by time introduced by the Ministry of Finance. However, so far the Ministry of Finance has not yet circulated the law, but high-level details have been revealed through press releases and the FAQs. I think so that, in our opinion, that the further information which the ministry will reveal is expected to be released by the mid of 2022. Now we will move next to the effective date and the rate. What is the effective date and rate? The effective date of the corporate tax.
Imad, we have a definition of corporate tax as well. If you can just high level discuss on that as well.
Yeah, the corporate tax, basically, it's a direct tax on the income and the profits of the businesses. It will be levied on all the businesses who are earning the profits and from their all the transactions, and those businesses will give the tax, and this tax will be calculated on some different rates, different given slabs.
Right.
Here, okay. Now, what is the reason of the introduction of the corporate tax in the UAE? The position of the UAE as a global financial center and international business hub, the UAE corporate tax regime will support investment and headquarter activities and ensure the free flow of capital, trade financing, and the services. So that step taken by the UAE government is to introduce to the corporate tax over here in the UAE is to make number one, to make the UAE position stable in front of all the other tax regimes and make it same as there are in the other countries the tax system is. Here, now, what is the effective date and what are the rates of the corporate tax in the UAE? The effective date of the corporate tax will be after on 1st June of 2023. So the first corporate tax return will be due for the submission on 1st of July 2024. If some businesses, they have the other financial years or they have some other dates which are after the 1st of June 2023, the same impact will come on them. Yani, suppose if the date is the start of the business is 1st January. So the start date of the corporate tax will be 1st January 2024. And it will, the first corporate return will due on January 2025. This is the start of the due date. January 2025, they will be liable, they will be eligible to submit the return. But till now, there is nothing is being revealed that what will be the end date of submission of that return, whether it will be 28 days like in the VAT, whether it will be 3 months, whether it will be 6 months given, because all the companies after finishing their effective sorry.
Yeah, go ahead. It's okay now. So Imad, actually, just to understand it more clearly, so what you are trying to say is, so from 1st of June 2023, it is going to be applicable on all the businesses. And if
Yes.
the business financial year is going to be started after 1st of June, so they will be considered, or that will be considered as a starting date for their tax applicability as well.
If the business will be start after 1st June 2023, so the applicability will be the same as yani, if it will be started from, if it is started from the September, so it will applicable from September 2020. If it will be started from the 1st January 2024, then the applicability will be from 1st January 2024, and it will go for the full year. It will not be like the 6 months or 3 months.
All right, very clear. Very clear.
Okay.
Yeah.
Now we will move on.
Sorry. That means each company will have a different due date for filing the return, isn't it?
Yes,
that's right.
Each company will have, it will follow it as per the financial year.
And effectively, the return is for one full year, not any broken.
Effectively, return is for the one full year, not the part of the year.
Yeah. Sorry, who is this? May I know the name?
This is Hari from Al-Rasomani Group.
Hi, Hari. Yeah, this is actually, as you know, that there is no law has yet come. So whatever we are, interpreting from the FAQs and from the press release. So what
Understood.
we understand,
I fully take it. Sure.
Yeah. Definitely. So what we understand so far is like this. So because law or the FAQs, they're specifically saying starting on or after 1st June. So for example, if your business year is starting from 1st of September, then your tax applicability is from 1st of September. Yeah.
Understood. Thank you so much.
Okay, now we will move on next on the rate. It is very simple and straightforward, and I believe it's very lowest rate as compared to the other taxable countries. 9%. 9% rate over and above of a limit of 375,000 dirham. Net, if the net profit of a company is up to 375,000 dirham or below, the tax rate will be 0. More than the 375,000 dirham, then the tax rate will apply. We can just, for the comparison perspective, we are showing here the corporate tax rates of some international countries.
Yeah,
also,
Imad, before you move on to the next slide, I just want to clarify one thing. So what you're trying to say is up to 375K, the percentage is 0.
Yes.
It's not exempt. So it means that the companies, they have to register themselves and they have to submit the return as well with the 0%.
Yes, actually it is like this, Arafat. Yes, you are right. Each and every company need to be registered and filing the return. Either it will be 0 if their profit is up to 375,000 dirham, then it will be 0. If more than 375,000 dirham, suppose it is 400,000 dirham, then they will deduct 375,000 dirham, and on 25,000 dirham, they will
or 50,000 dirham.
25,000 dirham, they will pay at the rate of 9%. We have some question from the Sanjeev.
Yeah, hi. Good afternoon, Mr. Imad. Question
Good
is
afternoon, sir.
you're saying two things. One is your slide says taxable income, but you are mentioning net profit. We are talking on the net profit itself, right?
Right, net profit, not the revenue.
Okay.
Like
All right.
likewise the VAT. Likewise the VAT. VAT is on the revenue. VAT is on the sales, right? But the corporate tax, it will be on the net profit or income.
All right. Thank you.
And the rate of the corporate tax will be 9%. Here we are showing you some examples from the other countries like Australia, the tax is 30%. Canada, it is 9% to 31%. China, it is 25%. Denmark, 22 to 25%. France, 15% to 26.5%. Germany is 29.65%. Even the USA has 21%, UK has 19%, Switzerland 17.92%, Singapore, Malaysia, Italy, every country which are the you can say that the high
Established.
and having the rich tax system, their tax rates are higher than the UAE. UAE is introducing only up to 9%.
Here I can see Humayun, he wants to ask something. Can you please unmute Humayun?
Yes, my name is Umayun Bashir and I'm from UK. Actually, I would like to ask one thing. When I was reading, this regulation, there was a clause where it says that tax would be applicable for domestic trade only. And if it's like a company which obviously doing commission or supplying services to worldwide, and that income is not taxable in UAE, even the offices in UAE and their staff and everybody is in UAE. So that's, if you can clarify that, I would really appreciate on that.
Thanks very much, Humayun. Actually, we are touching base on those topics in the next slides. So it will definitely be covered. But if you still feel that if it is not covered, then we can take your question at the last.
Okay, all right, thank you.
Thank you.
Okay, now here I will give the mic to Mr. Arafat and the corporate tax system.
Thank you, Imad. Thank you very much. So I will discuss about the corporate tax systems. So actually, there are different kind of corporate tax systems used in the world. Citizenship-based corporate tax system, residence-based system as well. So we are expecting, based on the FAQs and the press release so far, UAE will introduce the residence-based tax regime. So what it means, there are two main things. One is if the business is the UAE resident business, then they will tax the worldwide profit of the UAE tax resident. Then number two is UAE source business income of the non-residence business. So for example, if you have the company which is here and you have some subsidiaries in some other part of the world, so whatever you are earning on that income, it will be taxed over here, because the CT regime of the UAE, it will consider you as a resident, and then they will charge tax on your foreign income as well. There are certain other rules which will come into the consideration as well, and which will be clear in the law itself once we have the law in place, which will be like, what are the tax credits you will get? There are certain questions which can be answered once the law is revealed or it's introduced. So there are two things, which is taxes the worldwide profit of the UAE resident businesses, and the number two is UAE source business income of the non-resident businesses. The next question is how you will determine the residency. So there are two things. Either of these two conditions are met, then you can consider yourself or your business as a UAE resident businesses. The first one is the place of incorporation or the registration. If you have the company over here, if you have incorporation in the UAE, then you will be considered as a UAE businesses. Number two is place of effective management and control of the business. If you are having effective management and control, which is happening in here. And if you have some company outside the UAE, but it will be considered as the UAE resident businesses. So the next one is the exemption from the UAE tax regime.
Arafat, if you don't mind, just a couple of questions which are relevant to the previous slide. So I thought better to address them right now. You know, on the 375,000 Mahindra is asking, it applies at an individual company level, right? So assuming group consolidated tax return is allowed, does it also apply at the group level or the individual company level? 375,000.
We will discuss this in.
Okay, perfect.
Actually, we have a slide for group as well.
For
but
where
yeah, Imad.
Yeah, where we will discuss how the groups can be made and what will be the impact on those.
And based on the high level information so far, we are assuming and we are expecting that it will be same for the group or for the group individual company. It will be the same.
We have some question from the Monica. Can you?
Yeah, sure. So, you know, Arafat, the question is it and or, right? So in the sense that, is it place of incorporation, registration, or place of effective management and control of business, or it has to be both? Both conditions have to be met.
Either of one.
Either or. Perfect. I hope that answers your question, Monica. Yeah. And then Arafat, one more question, which I think is relevant now. Is there going to be a certain way from the authorities on how you will calculate taxable income and a way to do the adjustments to financial statement net profit from Kusala?
That is a good question. Basically, all the people who are from the finance background, they want to understand this. But till now, until the law doesn't reveal, we cannot say that which are the items which are admissible, which are the items which are not admissible, and what will be the calculation process. They have told the net profit 375, but to reach to 375,000, what are the items which are admissible for the tax and what are the items which are not admissible for the tax? That information didn't yet came up. That information will come up with law.
Thank you, Imad. It's a very detailed answer of Imad, but if you ask me and if I can tell you the straight answer high level basis, so far they are saying the net profit based on your financial statements, and your financial statement, they have to be made according to the IFRSs. So first of all, you need to have your accounts ready with the IFRSs. Based accounts should be ready and audited. And then you have to consider what are the deductible expenses and what are not the deductible expenses. Then you can do the adjustment and calculate the net profit accordingly.
Okay, perfect. Right. This is another question, but we'll address that later. Free zone versus mainland. That's going to be
this is about the system. So I mean, let me tell you, there are three main systems which are followed around the world. Residence-based system is a widely used system, and I mean, now most of the industrialized nations, they are using it. More than 130 countries, they are using this residence-based system. There is another system which is citizenship-based system, which is more on the personal income tax, but USA is using that system. And there is another system which is non-dom tax system, which is used in the UK right now. And it's a combination of both citizenship and the residence. But overall, based on our assessment, we are expecting that UAE will adopt the residence-based tax regime. Shall we move on to the next?
Absolutely, yes.
Right. So exemption from the UAE corporate tax regime. So capital gain and the dividends are going to be exempt for the qualifying shareholding. Then the next question is, what is the qualifying shareholding? Again, we can tell you the high level understanding, but once the law is there, then we can see like what exactly the requirement is. But if you see around the world, like in UK, Netherlands, they are using the 5 to 10% of the shareholding in order to in order to fulfill the requirement or fulfill the definition of the qualifying shareholding. So there are different conditions. One is 5 to 10% of the shareholding you need to have. Then also retention period is 12 to 24 months. So once you have 12 to 24 months retention of that specific security, then you will be considered as a qualifying shareholding. So if you have a qualifying shareholding, then capital gains and dividends earned on that specific security will be exempted. Then other thing is qualifying intra-group transactions and the restructurings. They will be allowed as exemption as well. But again, you have to fulfill the certain condition. And we are expecting that those conditions will be discussed in more detail when the law comes. Third thing is right now, extraction of the natural resources, this specific sector, it is exempt from the UAE corporate tax regime, but there is another tax, which is the emirate level tax, which is currently imposed. So we are expecting that it will be continue with the emirate level taxation system, and there won't be any UAE corporate tax on that specific sector. Then regarding the withholding tax, there is no withholding tax in the UAE corporate tax regime. So whatever the domestic and cross-border payments of interest, dividends, other payments, they will not be subject to withholding tax. Withholding tax is, I'm sure like mostly from the finance background, they know it's a deduction at source. So whenever you make the payment, you have to make the deduction at source, and you have to take into consideration when you submit the return. Then the next thing is the foreign tax credits. I think Umayo asked about this. So foreign tax credits are available for the foreign payments. So they will be available, foreign tax credits. Another thing is foreign branch profit. If any of the UAE based business, if they do have a branch around the world, we are expecting that they will be exempt. Based on the information so far we have received, it will be exempt. Or if you are paying tax in that specific country, you can take the tax credit in your calculation. Any question on this? Yeah, Varun, shall we move?
Yeah.
I have a question, I think, from Humayo.
Yes, one thing is obviously income in international subsidiary being taxed, but there would be some operation which obviously earn as a branch, which is there is no taxes, only expenses, and the income is generated overseas for some reason, and they have a team of people like one or two where there's a branch, UAE company reimburse expenses. So profit or income of that branch will be treated as taxed or non-taxed, So will the tax of UAE will apply there in UAE because the income would be consolidated in UAE company.
Yes. So what I mentioned and what we are expecting is the foreign branch profits or expenses, they will be, I mean, if their profit will not be considered as taxable in the UAE.
But if there is no profit and only income and expenses and it's consolidated directly into UAE, then obviously it will be taxed in UAE, or it will be like, because there's no tax in certain circumstances where obviously you earn commission income, you pay certain expenses, but the income directly consolidated in without being taxed into relevant country, and it can be consolidated in UAE. So will that be taxed in UAE, or
it will be taxed? It will be taxed.
It will be taxed. If you go back to the residence-based slide where we discussed about if you have foreign income, then it will be taxed because you are based in UAE and your business is UAE resident business. So from that perspective, if you are consolidating over here, it will be taxed. But if you have already taxed in that certain country, then you will get the tax credit.
Okay, all right, understood. Thank you.
Right. So next one is taxation on individuals. So there is a good news for the people who are living in UAE. So there is no tax on the individuals. As its name says, corporate taxation. So this tax is applied on the corporates only. So there is no tax on the individual. So let us go into more details on certain categories. What are those categories which individuals, because we have got so many queries from the people and they were quite confused with the taxation. They were thinking that there might be a tax on their individual income. So we just jot down all the possible incomes which individual could get. So first of all is the salary and other income. It is not taxable. Investment in real estate, if any individual who is investing in real estate and if he's earning income from the real estate, it is not taxed. Then if any individual is doing some investment in any securities and if he's earning dividend, capital gain, it is not taxable. And also there are some investments possibilities for individuals like saving certificates, bank deposits. They are also not taxable as well. However, we have one exception over here for the freelance business, because as per the law, if you are doing the freelance, you have to get the license from the authorities. And if you are getting the license, then you are subject to tax as well. So I think it's very clear until unless we have any question.
It is very clear. Any profit which you need to take without establishing a business or without establishing a license, that will not be taxable.
It will be exempt. Right. So now I again pass to Imad. If you can just tell us about taxation on non-residents.
Just one quick thing, Arafat and Imad. So Sumita is asking, is there a definition for place of effective management? Or do you think
we are expecting in more detail in the law itself, but effective management is the one which who is making the strategic decisions. So so far it's quite subjective, but we are expecting that once the law is there, then we can have more clarity on that.
Very clear.
Do we still have a question from Humayun?
Yeah, I can see.
No, I think I just, I'm not untied, sorry.
Okay, no problem.
Okay.
Yeah, Imad.
Now, our next topic is taxation on the non-residents.
Okay. Sorry, Imad, sorry to interrupt. There's a question on freelancers from Rohan. Can a freelancer charge his salary as a tax deductible expense?
As we discussed earlier, all these details like what is deductible, what is not deductible, this will be covered in the law itself.
Clear.
As we discussed earlier also, that the non-residents who are either the individuals or the foreign companies. Non-residents are the persons who are dealing or who are investing outside from the UAE and are not in the UAE, either their presence through any business or through any setup. They are all will be considered as a non-residents. So all the non-residents who are either the foreign companies or the individuals, the UAE will not impose any corporate tax or any withholding tax on whatsoever they need to invest or to make the loans to the UAE businesses. Yani who otherwise they earn income which is not related to a trade or business conducted in the UAE in an ongoing or regular manners. It means simply like before Arafat explained that if nobody needs any license or any presence in the UAE in the shape of a business or in an establishment, UAE will not deduct any tax on that income. Yani we assume that the UAE corporate tax regime will only tax foreign companies and individuals that have permanent establishments in the UAE, that have their presence, that have their shares, that have their establishment in the UAE. That will only be taxed. And all other than those, all the non-residents will not be taxed. Now the major concern of some of the people, which is that how the free zones will be treated. Free zones companies which are within the scope of the corporate UAE tax, the answer is yes. What they need to do is they need to register. First of all, everybody should understand over here that every company, whether it is in a free zone, it is on a mainland, they need to register on the corporate tax for the corporate tax purposes. They need to register themselves. They will get, like we were getting in the VAT, there was a TRN, there will be a tax number, corporate tax number for each and every company. Whosoever has the establishment, either a freelancer, free zone, mainland, small, big, individuals, even who has the licenses, small shops, they have the licenses, they need to register. The answer is yes, they are in the scope of the corporate tax. They will register with themselves and they will submit a corporate tax return on the annual basis. Where it is a taxable income, they are earning a taxable income, they are not earning a taxable income, that is separate. But they have to submit the return.
Right. And Imad, at that point, I think I'll take a question from Syed. Do they need to submit an audit report to the FTA at the end of the fiscal year?
This is not yet been clear. This is not clear.
But do a lot of other countries require it?
A lot of other countries, they require, they do the self-assessment also. All the companies, they don't go to the auditors, but they do their self-assessment also, but they submit some document which is a proof of the income, which is a proof of a business income. So it means that there will be some document. That document will be audited, that document will be not audited, or how it will be considered, it is not yet been clear. It will be clear with the law.
But Varun, answer to your question, based on our experience so far with VAT and other regulations. So what we have seen is like initially, or we are expecting that the UAE authorities, they will be lenient at the initial phase, at least for 2 to 3 years. So they would trust the businesses. They would ask business to submit the return, and you might need to just submit the management accounts, not the audited accounts. But if there is an audit on your company, then you need to have all the information or the audited accounts ready. So as a good practice, yes, you should have all the audited accounts ready, because if there is any audit from the FTA, then you have to ready and you have to show them all the required documentation. Yeah, Imad.
Okay. Now the UAE corporate tax, that will continue to honor the corporate tax incentive with the whatsoever they have offered for the free zone businesses, that will comply with all the regulatory requirements and do not conduct business with the mainland if those are the free zone companies which are wholly a free zone companies, and they will fulfill all those requirements that they are not doing any business with the mainland company on the mainland, that they will be considered as a free land, and the UAE will keep on honoring what is the period of honoring, that can be from in the range between 5 to 50 years. But it has not been mentioned till now that what is the time period of the tax holiday will be given for the free zones.
So Imad, it means that the tax holiday is there.
Tax holiday will be there, but it is not clear how much it will be, whether it will be the same which UAE has promised.
Because I have the understanding that the different free zones, they are having the different arrangements. Like some free zones, they have a tax holiday of 5 years or 6 years, some have 50 years. So what you're trying to say is, I mean, it will be honored.
It will be honored in the same capacity.
All right.
However, I think there's a very interesting point there, right? Because obviously there's always this gray area whether free zones can actually do business with the mainland or not. And obviously, a lot of, most free zone companies do business with the mainland, especially services companies, right? So they will all come under this purview, and will have to sort of pay taxes for their UAE mainland business. And I think it will only become clearer later when the law comes out, like what part of their income is taxable and what isn't, right?
Exactly. This information will come with the law, that what is the taxable, what is not taxable, what is admissible, what is not admissible. This all information will come up with the law.
And Varun, just adding to your point, actually, this is the point where businesses, they have to plan themselves. They have to place themselves based on their business models. So, for example, if some businesses, if they are not doing any business with the mainland, which I know many of my clients, they are not doing any business with the mainland. So they are just receiving the shipment and sending it out from the UAE. So they are good, actually. They are good to go in the free zone. There won't be any tax on them. So you have to see, you have to look into your business model, and you have to do your tax planning accordingly. Yeah.
Absolutely. And at that point, I will say one quick thing, which is for those of you, who are attending this webinar today, we have an interesting offer for you at the end of this webinar, but we will send it to you towards the end of this webinar, 5 minutes before the ending. We'll make an interesting offer to you as well. So I thought I'll mention that here.
Yeah. Imad, can you please
this is the tax groups, which was the question from, I think, Sanjeev or somebody else. Whether the UAE here are most of the companies, they are working in the groups. And we have already seen that with the introduction of the VAT, UAE Ministry of Finance allowed to make the groups and to submit the single return for all the group. And they have given them a single VAT number also for all the companies. So the UAE corporate tax regime will also allow the companies to form the tax groups for the corporate tax purposes. And if the group of the companies having common ownership, same strategies will apply over here. The common ownership, the effective management, the control over the management, these all points will be taken care over here while submitting the corporate tax return on a consolidated basis for the whole of the group. Based on the other countries' tax regimes, what is the common ownership definition? That it fulfills around 95% to 100%. But in the UAE, I think so it will be, they are going to give a little bit relief. It will be from 75% to 100%. The detailed law and it will highlight all the areas of the certain conditions, what are the requirements, how the group can be made, what are the extractions, how you want to create, how you can come into the group, how you can go out from the group. These all definitely will come with the law. But yes, the groups can be made and that group can do the transactions with one another. Those transactions will be considered for the corporate tax. Those transactions will be eliminated for the tax purposes. These all information will be there after once the come. But the groups can be made and once can be given.
Yeah, Imad, actually I've received one question on my personal chat. Someone is asking, like, is there any relationship between the VAT group and the tax group?
That is a good question. The same group, I think, in our opinion, the same group which is in the VAT, that will also be considered as a corporate tax group. There will be the same group which you are doing for the VAT submission, that will be considered also as a corporate tax group.
So it means that is it possible that if you are having a VAT group, but you are not having a corporate tax group?
Arafat, this can now cannot be cleared, but this can, because it is not yet been declared that it is a compulsion, or it is a mandate that if you have a VAT group, you should have a corporate tax group.
You're expecting that it will be the same, like
we are expecting that it should be the same. It should be the same because it is beneficial for the companies that they are giving one VAT return and they should be giving the one corporate tax return also. but whether it is mandatory or it is not mandatory, it is not yet been revealed.
All right. All right. So next one is the banking sector. So let me take part in this presentation as well. So for banking sector, as we discussed about the natural resource exploration of the natural resource sector earlier as well. So similarly for the banking sector, currently there is emirate level taxation on certain foreign banks or the branch of the foreign banks. So, but as per the FAQs and the press release, it is very clear that the banking sector will be subject to the UAE corporate tax. Then next thing is the large multinational groups. This is also a very interesting topic. So what is mentioned in the FAQs and the press release, that there will be different tax rate for large multinational groups. So first of all, you need to know that who is multinational. So the answer is the multinational corporation is a corporation that operates in its home country as well as in other countries through a foreign subsidiary, branch, or other form of presence or the registration. So merely earning income from the outside its home country without a foreign presence or registration would not make a business a multinational group. So it means that if you have the presence as a company in the foreign country and that company is your subsidiary, then it is considered as a multinational. Then you fulfill the definition of the multinational. Then there is another question, which is who is the large multinationals? So first of all, you need to see whether you are multinational. If yes, then you have to see whether you are large multinational or not. Then the revenue cap is there. If you are earning 750 million euro or 3.15 billion dirham, if your revenue is reaching to that level or more than that level, then you can consider yourself as a large multinational. And this is based on the OECD inclusive framework, which talks about the base erosion profit shifting. So there are two models or the two options are there, which is pillar 1 and the pillar 2. So we are expecting that the UAE corporate tax regime will adopt the pillar 2 of which is BEPS, BEPS pillar 2. They will adopt that, and then global minimum effective tax rate will be applied on the large multinationals. Any question? Then now we are moving to the transfer pricing. So as you know, like if you have a multinational group or if you have common ownership entities, then there is a question of the transfer pricing will arise as well. Again, the question is, will transfer pricing rule be applicable to the UAE? The answer is yes, it will be applicable. And we have got the clarification that once the law is announced, the transfer pricing rules and the guidelines will be there as well. And everyone has to follow the transfer pricing guidelines as well. And the UAE city regime will have transfer pricing rules and documentation documents in line with the OECD transfer pricing guidelines. It will be in line with the OECD guidelines. Then the last topic.
Just, Arafat, a quick question there. I know we're sort of almost out of time, but a quick question.
Yeah.
So Sumita is asking, what about multinationals falling under pillar 2, but operating in a free zone? Which one will prevail?
Definitely, these will have the corporate tax. They will be, because these companies are doing the business outside the free zone. So they will have the corporate tax impact.
But if then you have to see, and I think we'll get more clarity once the law is there, but then you have to see the conditions. If the multinational is operating in the free zone and if they are not doing any business in the mainland, then they can continue enjoying the tax holiday. So then there won't be any impact on them. But still, we need to see the law and then we can assess accordingly. Then the last thing is the economic substance regulation, which is here. If you are the entity who are doing the relevant activities as per the ESR regulation, then you have to follow the ESR. If you see, the objective of the ESR is if some companies who are doing or who are shifting the profits. So that was a inclusive framework of the OECD, which requires all the countries, all the entities in that specific of the member countries, they have to follow the ESR. So what we are expecting is once the corporate taxation is there, then those companies who are actually following the ESR regulation right now, they won't be applicable on them actually, because they are subject to the corporate tax. But free zones entities, because they're enjoying the tax holidays, it will continue to be applicable on them. So next is the way forward, what you can do and what you should do in order to make sure that you are complying with all the requirements. The first thing is the implementation plan. So we have also mentioned the timeline just for the ease of the audience. So you have to have a target in the first quarter of the 2022, you have to have an implementation plan. You have to see like what exactly the implementation would be and how you would do the implementation. Then number 2 is the detailed analysis, which you can do in the second quarter of the 2022, where you can see like what are the requirements, what you need to do, what are going to be changed in your current infrastructure. Then number 3 is the impact assessment in the third quarter. Why it is in third quarter? Because I would expect that by June, we will have the law in place. So it's better to do the impact assessment once your law is already revealed. But I know many companies are doing the impact assessment in second quarter as well. But I personally feel that you have to do the impact assessment once the law is there. So you will have a better clarity and understanding. Then number 4 is implementation of those changes. You can do in the fourth quarter of 2022. And the last is the post implementation and the continuous compliance, which will be ongoing. Once you are registered, then you have to make sure that you are complying with all the rules and regulation. How Compliance 360 consultant can help you? We are here to help you with the comprehensive planning for the CT of your organization, including detailed analysis, whatever we discussed earlier, impact assessment, implementation, or post-implementation guidance as well. We'll make sure that you're ready to comply with corporate tax once it becomes effective. And if you have any question, this is our email address. So you can directly write us, and our team, we have a dedicated team for the taxation. So we will get back to you. Over to you, Varun.
Thank you. Can I, before you conclude, thank you for a very good presentation. I don't know whether it's too early to ask this question. Is there any provision related to carry forward loss is known?
Yes, it is there. You can carry forward the losses in the next year. And even if you are a group, then you can carry forward or you can take the losses from the other group companies as well. But in terms of the timelines, it is not clear. Either you can carry forward for 5 years, 7 years, 8 years, whatever it is. So it will be clarified in the law.
Okay. Thank you. Thank you so much.
Brilliant. So look, we want to do 2 things before we open up for more questions, if that's okay with everyone. One quick thing, if you can stop sharing your screen, Arafat, for a minute. What I would like everyone to do is, whoever's comfortable with this, please fix your hair, get on video so we can take a photo for social media. Important to fix your hair, of course, and then do that. If I can please ask everyone to do that, please. Whoever's comfortable with it, of course. I'll give everyone just about half a minute more before we do sort of take the photo. And Kanika, you'll have to help me with the photo, of course.
Yeah.
Okay. We're going to say 1, 2, 3, tax. Okay. When I when I say 1, 2,
1,
3,
2.
tax. Perfect. Thank you so much for that. One quick offer that we have to make, which Kanika will just type on the chat. Arafat and Imad have very kindly offered that anyone who's looking for a free consultation for how their organization can prepare for the impact assessment and their organization can create an implementation plan, they're very happy to help you out. So all you need to do is fill up a short form, which Kanika has typed on the chat now. So please do, fill up the form if you're interested in about 45-minute, 1 hour free consultation on the implications for your organization with Imad and Arafat. And of course, we're happy to stay for another 2-3 minutes to answer any specific questions, even 5 minutes if it takes. But everyone who wants to leave now, we're done with the presentation itself. We will be sharing a recording of this presentation with everyone who's attended, as well as everyone who registered for the webinar. Any questions? We're still available. Any unanswered questions? There was one unanswered question around, are there any exempted areas, for example, real estate? Let's just quickly answer that question for Humayun.
Sorry, I didn't get you.
Is there any trade type excluded? Example, real estate?
No. Till now,
Imam.
no, nothing is excluded for the real estates. All the businesses are only those who are the extracting the natural resources. Those are out from the corporate tax, and they will be, like Arafat told already, that they will be considered on the emirate-based taxes. But other than that, all the businesses are included.
Sounds amazing. Super. If anyone else has any questions, feel free to unmute yourself, talk it out. But thank you so much, everyone who's attended. Kanika has pasted the form again on the chat, so please do have a look at that. But thank you so much for your valuable time, everyone. And of course, thank you, Arafat and Imad.
Thank you very much.
Thank you very much. Thank you, everyone. Thank you, everyone.